Hey everyone, welcome back to the channel. Going to take a look at Tesla today. So they recently, I'll pull it up here for you guys, released, if you go to ir.tesla.com, they have their Q1 results, and I figured, good of time as any to go ahead and just update the DCF I did a long time ago, and I did that before even Q4 results were out, so that was probably like early January or maybe December. So it's probably been a few months since I've really looked at Tesla, but figured I would open up this deck. And I think they're actually progressing better than I thought they would be. But with that said, they're still incredibly overvalued. But definitely recommend reading through this. Some interesting highlights, right? Q1 revenue just slightly less than Q4 for automotive. Maybe there's some seasonality in there. And we can see they give us the production numbers as well, right? So they, produced few more vehicles, sold a few more, but based off the mix, the revenue's down, right? So they sold 17,000, 18,000 less Model S's and X's and actually produced zero. So they basically completely shifted production to Model 3 and Y. And then in here, they also give this great little chart of capacity. So with that being said, I've created a revenue model that I'll walk you guys through. I went back through their historical presentations and they have this and kind of looked at the ramping of production and then did a little just Googling on Berlin and Texas. So we'll touch on that. But, something I think that's interesting, if we look at Tesla this week, right, it's down. Now, don't get me wrong, Tesla's up and down. If we look a month ago, it was down. There's really no rhyme or reason, but I guess what I'm saying is like they beat earnings from the standpoint of what Wall Street was expecting, and then I read online people are like they beat earnings and they're still down. Well, yeah, because their stock price is just so far from reality. Like they don't have to beat earnings, they have to just like annihilate them. So I'll walk you through. My model right now gets us a valuation of 95 billion. And, at first glance, people might be like, oh, that's absurd, that's ridiculous. My model has them going to $100 billion in revenue by 2030. Today, Toyota is doing 270 billion of revenue annually. And I guess my total is actually 130 if we include these other lines of business. 130, and Toyota is 270 billion, so about double this. And I think if we pull up Toyota's market cap, they're probably about a $200 billion company. So I think from this standpoint, right, like my projections, right, you could argue these are completely wrong, and I'll walk you through how we get this top line projection. That's the big thing here. But before we jump through the revenue, just real quick, automotive COGS, we did see improvement in margins in Q1, so I'm just layering in a 0.5% improvement as we go forward, getting them down to 69%. Other COGS, as sales is still operating above 100%. I think this is going to take a while to come down. Their service is incredibly unprofitable. They're, losing money on servicing of vehicles, it looks like. So I don't know. I wouldn't expect this to ever be what drives value of Toyota, or not Toyota, of Tesla. I see them getting rid of this sooner than later. And then SG&A as a percent of sales. You'll see these percents don't really make a lot of sense, and they don't. It's because I'm just trying to hold the SG&A dollars relatively flat. Around 5 billion for a while and then have it kind of slowly ramp up. But um, my thought is like it's not going to, I think you could probably operate SG&A and scale it pretty well at some of these levels. But the big assumptions really are going to be this automotive revenue. If you look at the other revenue, I've actually just held this to 20%, which is like pretty fair, pretty reasonable, I think, kind of in between 2019 and 2020. And just held it like that forever, on a $4 billion base. That's still pretty impressive growth, have it growing to 26 billion. But I think the top line revenue is really the piece to understand here. So apologies, this is a quarterly model based off the quarterly decks they put out for investors, and I'll walk you through it. So all of this is data that they've provided for the most part, that's historical data. So Model S and X production, Model 3 production, and then starting in Q1, they switched it to Model 3/Y. So I did just create a separate line here. This gives us just kind of an idea of what the Model 3 production was. And so we're like right here, 302,000, and then if we sum this, 454, so maybe 150,000 of this is Model Y versus 3. Hard to say for sure, but just kind of a baseline gut check, I guess you could say. And then they have the deliveries piece. So same thing, SX, 3Y. And then we have automotive revenues. So this is how much their automotive revenue is for each of these quarters. And then ASP, average selling price per vehicle, 91,000. And you can see back when, they were delivering mostly S's and X's while the 3 ramped up. And then we can see how it slowly decreases as the 3 just completely overtakes. And you can see in Q1, it's 49,000. So basically the average price right now they're selling is a $49,000 Model 3/Y. I think the starting price for both of these is actually 40,000. So that means people are probably paying for upgrades on average, clearly. Longer models, something like that, longer battery range. And then the last thing we look at here is capacity. So this is what I was talking about. They give us the capacity numbers of the facilities. I went back and pulled these out as far back as I could, which was about Q3 of 19. And really the point of this is so we can see how capacity scales. So like when California ramped up for Model 3, right? It didn't really take that long to get to full capacity. Shanghai, though, we see something interesting, right? It's taken a long time to really ramp up to full capacity, and they're still not there yet. Full capacity sounds like it's 500,000 vehicles annually, and right now I think they're doing 450 is the maximum capacity. So after that, we get the total capacity. So just the addition of these two. And then we're calculating the utilization, which is the total production divided by the total capacity. So we can see, right, they always have excess capacity, and I think that's good, right? That allows them in a crunch to produce more vehicles as necessary. But I think what this is also telling us is they're not producing, the strain on Tesla revenue isn't a capacity-based strain at this point in time from what, I'm able to glean from these figures here. Now, maybe there's something in here with the batteries that's not fully covered, right? Like the Gigafactory, like I don't know if the Gigafactory in Nevada can produce 1,050,000 batteries a year. I'm assuming these capacity numbers they're giving us, that's how many vehicles they could produce in a full year if they ran this line at maximum capacity. So you can see as capacity has kind of increased, right, they've actually done, demand has kind of scaled, and I think that goes with the 3 and Y just gaining in popularity. But right here, right, you can see Q2, kind of a big drop, and then all of a sudden Q3 2020, we see kind of a big spike here. It looks like demand is really kind of picking up. Same thing for Q4, same thing for Q1, and throughout this period, capacity was kind of increasing. 100,000, and then you also have utilization going up 20% there. So I think that's promising. That shows that demand for Tesla is increasing. So now I'll walk you through my projections here, just to kind of give you an idea of how I thought about this. So any cells in blue, you can download my model and change. I've set capacity and deliveries, or production and deliveries equal for now. Obviously, there's always this like slight delta, right? They're going to build up a little bit of an inventory, then they're going to release some of it. But just for the simplicity of this, I've set them equal because historically they're pretty close most quarters. So I've set those equal for now just for the simplicity of the model. And then Model S and X deliveries, there was basically none in Q1, which makes me believe either they've stopped delivering them, stopped focusing on it, and have a big wait list, or the demand for the Model S and X has really kind of died out and people are waiting for like a refresh or something like that. But I've made the assumption that they go back to 19,000 vehicles a quarter. I think if you look historically, averaging about 19,000. So I've just held that constant going forward. I don't think that this is ever going to be the big driver. When there's a cheaper option, that's going to be what people buy. And in the luxury segment, when you're at the $100,000 vehicle, there's now Porsches and Audis and BMWs you're competing with. I don't think that's going to be the growth driver. I think it's going to be the cheaper entry level market. So what we've done here to get the other ones, I calculate total deliveries. And this is going to be utilization times total capacity. So I guess maybe we can walk through the capacity things first. So for utilization, I have it increasing. So 68.7 to 69, 69.3. So I have this increasing as new facilities come online. And once the new facilities are fully ramped up, I have it starting to increase more dramatically because I think, as the capacity stays flat, the utilization will increase quicker just because you're not adding more capacity every month. So I have it growing a little bit quicker at 1 percentage point versus 0.3%. So the next big thing that we have to get our minds around is Berlin and Texas factories coming online and the capacity there. So I've assumed these facilities are going to be similar capacity to the two that are already up, and I've phased them ramping up at the same rate that we had for Shanghai. It's the best proxy we have at this point. So that's what I've done for these facilities, and they say they're supposed to both come online in late 2021. So basically what this is telling us, by the end of 2024, we are expecting to have roughly the ability to produce 2 million cars a year, which I think would make them a top 10 auto manufacturer if they can sell that many vehicles a year. I think like Toyota is the largest at like 10 million, but then I think there's like a big drop off to like 1.5 to 5 million is kind of like that sweet spot for large auto manufacturers. So this puts them being by 2024 a large auto manufacturer. And then you can see the utilization, right, that I have going up. So from there, that's how we calculate the total production numbers. It's just our capacity times our utilization. So we can see it's increasing every quarter up until we get to 400,000 vehicles a quarter. So about 1.6 million vehicles a year. So I think that those are all relatively fair assumptions. And you see a little dip here, and that's just because they sold some inventory, so they didn't have as much production. But the general trend is there. From there, we have to set the average selling price. What I've done is I've incorporated, right, if we're selling more Model S's and X's, our average selling price is actually going to go up until this number gets big enough to really start to decrease it again. So have it going up and then have it slowly decreasing down to 42,000. The idea here is over time, vehicles, I don't know if I would say vehicles are going to get cheaper. Maybe this is something we could tweak, right? Maybe we hold this. I guess my thought is as more consumers start to buy Teslas, they buy the cheaper ones. Tesla prioritizes delivering the more expensive ones to keep the average selling price higher. Eventually, they have to go through the backlog of the cheaper vehicles, right? That's kind of like the thought here. So over time, this price is going to come down. And to be more competitive, right, do they slash $5,000 off a Model 3 once they get their production costs down so they can sell more? I think it's kind of the selling price, I think, goes down, not up, just in my mind. And I think a lot of models out there kind of assume similar things. So from there, once we kind of have all of this mapped out, we have our quarterly projections now through 2024. I went through 2024 just because that's when we get to full capacity here, or we're up to like these facilities are fully running for Shanghai and Berlin. Obviously in Texas, obviously they're going to have to open more facilities to continue growing. I've ignored that for the simplicity of my model. And capacity gets up to about 80%. So if we look at kind of the full year numbers, and let me just collapse this real quick so we set of freezing panes because I'm being lazy. Right, 2021 total production 792 all the way up to 1.6. So almost doubling in 4 years. Total deliveries, same story, right? Because we're just holding that flat. And automotive revenue is going from 40 to 65 billion. So this has us going from, right, a capacity of 1 million to 2 million vehicles, or I guess 1.1 to 2.1 when you include the Model SX. So all of this kind of maps back in these first 4 years, right? You still see good growth, right? 43%, 22%, 27%, 8%. So, I think it's tricky looking at 2025 and out. The question is, with these numbers, right, we're predicting what? 1.6 million vehicles being sold. 1.5 of those are Model 3 and Y. That would put, if you split this evenly in half, 750,000 vehicles, that put these as like the 3rd and 4th best selling vehicles globally, right? I think the Camry is like far out in F-150, far out and ahead of competitors at like a million and a million two vehicles sold per year. But like just like a Honda Civic, I think it was like 800,000 vehicles sold per year. So this is putting this as being as common as a Honda Civic, which is like starts at like 25,000 bucks probably. Like I don't even know what a Honda Civic, like what's the starting price? 21,000, right? So this is a luxury vehicle. I'm sure if we looked at like the top selling luxury vehicle, um, it doesn't sell anywhere near this units number of units. Top 10 best selling. Do they give us the numbers? Yeah, like I mean, Tesla Model 3, 200,000 units. Lexus, right? So it's like the Model 3 is already the best at 200,000 units. We're saying they're going to quadruple that basically. So I mean, I think that's healthy. We're giving them credit for growth still. The question is like the Cybertruck. I think the Cybertruck ends up in this Model S X line, right? I think you sell 3 or 4 thousand of them a year. I don't think there's going to be huge demand. It's a cool gimmicky thing. A handful of people will buy it to be flashy. Outside of that, I don't think anyone's really going to buy the Cybertruck. How much revenue is the Semi going to produce? Is it going to be profitable? Um, so I guess with all this to say, and you could tweak, I've held 2025 out at 8.1% growth, which I think is healthy on a $65 billion revenue base. If you can still grow revenue 8% a year, that's impressive, I think. Right? To get you to a $100 billion valuation or $100 billion in revenue for automobiles and get you a $95 billion equity value in today's term. Assuming I have my net debt correct, that might actually change slightly because I did pull in the 2020 numbers. Let me update that real quick. I don't think this should make too much of a difference. Debt and then subtract out cash. Okay, so we get 110 billion because now they have more cash than debt. So 110 billion dollar valuation, right? So I guess all of this to say is like, yeah, Tesla's down after earnings. Like Q1 earnings were great, production's up, but I mean it's down in comparison to Q4. But to be valued at 660 billion dollars, right? We need to be selling 2 million cars a year now, not in 4 years. So, I mean, I think there's a big disconnect, and I think the markets in general have a big disconnect right now between um, valuations and kind of reality. But unfortunate, I guess, is what I would call it. But it just kind of is what it is. And I think we see a lot of these like meme stocks and people having an ability to build hype around their company, and retail investors pumping up stocks regardless of fundamentals. But I don't think Tesla is a good fundamental play from my perspective. If you know based off my assumptions, and I think we're giving them credit to still become just a massive auto manufacturer even, right? At 1.6 vehicles, 1.6 million vehicles. Let's see, largest auto manufacturers. Just have the cars produced. This does not have the cars produced. I know I have a video out there where I pulled all this data, but that was on my old computer, so I don't have the Excel file readily available. But I don't know. I thought Tesla was interesting, and I see a lot of questions about why is Tesla down after beating earnings, and they have to crush earnings every quarter for eternity to get to their valuation. So there's not a lot of upside, I don't think, unless if it's just more of a crazy retail sentiment of just buy and hold, um, that kind of stuff where it disconnects from the broader market. And that happened with Amazon, and Amazon eventually caught up to the hype. I just don't see how a car manufacturer ever catches up to the hype, um, especially when there are other revenues that don't even operate profitably. The margins are crap on them. So, anyways, thanks for tuning in. If you have any questions or comments, feel free to leave them below. If there's any other companies you'd like to see, let me know. I've big list from people that have commented so far, so I'm slowly trying to work through that. Some of the companies I'm not super familiar with, so trying to learn a little bit more about the industries before I throw those videos out. But thanks for tuning in.